So something I have seen over the years is the masses concentrate on a couple of certain bets. I've certainly seen this in real estate. Back in the day, everybody was buying new construction and flipping it before it was built. Then we went to flipping. Then we went to Airbnb. Then we went to syndications. I also know this happens in stocks, right? We went the .com route. We've gone banks. We've gone the big seven, the magnificent seven. So I want to talk about with Taylor why investors often concentrate their money in one area only to see it maybe go up and then revert to the mean. So Taylor, do you see this kind of behavior a lot in investors?
Oh, no doubt. And especially right now, Michael, I mean, to your point, the magnificent seven, as the markets call them, I started calling the significant seven before the market started calling them the magnificent, because whatever. But yeah, I mean, if you look at those names right now, it is all because they have two things going for them. All of them have some sort of exposure to AI, right? So artificial intelligence that is going to create this mass surge of productivity and increased margins. So that's the one thing they have going for them. And the other thing they have going for them is they're large companies that have really large cash positions and have a pretty decent moat around their business. And we've talked about them a lot, but they are, and I don't know if I'll be able to name all of them: Amazon, Apple, Microsoft, Google, Meta, Tesla, Nvidia. Got them. So that's the seven of them. And what you're seeing is a mass concentration in those names. And when you look at those seven names, they make up something like 40% of the NASDAQ 100 and something like 20-something% of the S&P 500. The concentration is massive. Apple is over 7% of the S&P. Microsoft is right behind it at 6%. Those are two of the largest constituents in the S&P 500 index of all time. And what people start to feel is comfort in the masses, right? If everyone feels comfortable in the same stock, what you do is just get piled in. And then the narrative behind the market is, look at this stock. It continues to go higher. It's such a great business. And that's what perpetuates this thing higher. And then when you think about the new Candy Crush of the day, it is AI. And will AI revolutionize the world? Will it be the internet? It might be, but might it also be Web3 technology that came out 2 or 3 years ago that fizzled, 3D printing that we haven't heard anything about in 5 years, blockchain that essentially has fizzled out over time? Like, there are a lot more things that you can point at and say, this was an infatuation of the market for a period of time and things rocketed off of it and then it fizzled, than those that actually made sense and actually played out over time.
Yeah. I've just seen it. And one of the reasons I still talk about real estate and go to meetup events is because I try to figure out where the masses are going.
Right.
Right. When I sense the masses, I did an event in San Jose, California. I think it was in 2019. I think it was 2020. And everybody was a brand new syndicator. And I'm like, oh no, we're about to repeat the sins: bad debt, short-term adjustables, horrible assumptions, total newbies. We're going to blow stuff up. And lo and behold, $100 million was blown up in one deal in Houston, Texas.
Right.
I'm like, predictable. Then we have all these Airbnb folks who, start with oceanfront properties and then they start downgrading because they can't afford it. And next thing you know, they're buying, properties next to graveyards. I'm like, that's not going to last long term. It's just the masses really do concentrate. If you happen to be early, you get the big wave, but that's not how it works for most people. Just that vicious feedback loop, it eventually pops or bubble or whatever.
And the thing on both sides, so whether you look at the stock market or whether you look at, like, I'll use the Airbnb example from the real estate standpoint. When you look about the stock market and you hear people talking about it and posting things on social media, they're never going to tell you when they have a stock that gets blown up. Never, ever, ever are they going to tell you when they have a stock that got blown up. But they will always tell you when they have a stock that catapults higher. And that's the same thing with the Airbnb front. And it's so visual and so attractive on social media because they show you this beautiful property. And they talk about the cash flows that experienced at the peak of 2021 when no one was working and everyone was on vacation or working from home and they were traveling the country. And they say, look what I can rent this out for a month. And it's a month, so it's not as much work as a weekend Airbnb is. And you hear all of the limelight and the ease and the simplicity of things. And now you don't hear as much about it because it's not going so well. but they're not going to tell you when they default on a loan against a property and go under and their credit gets scarred for life because of it. That never happens. So it's interesting on both fronts. You're never going to hear the bad stuff. You're only going to hear the good stuff.
Yeah, it's all about the highlight reels. That's really what social media has become. Folks, let me tell you, at least in real estate investing, it is never, 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 never easy. It always takes work. There is no easy button. You've got to get in 30-year fixed rate debt, cash flow day one, hold for a decade. There you go. If you get attracted to no money down, it's crazy.
I think when you look at it on the other side from an investment standpoint, it's the emotional cost that comes along with it. Because when you invest, there's not work created, right? So you don't have to deal with tenants. You don't have to deal with all of that, but you have to deal with the emotions. And so what are the emotions? FOMO is the most significant emotion there is in investing. If you look at me and say, Taylor, do you wish you owned more NVIDIA right now? Hell yes, I wish I owned more NVIDIA right now. I live in this perpetual state of FOMO because I invest like a grown up, because I know there's going to be a blow off top. So here's an interesting stat. When you look at the S&P 500 over the years, 40% of companies experience a 70% drawdown. So again, I'll repeat that. 40% of companies, almost half at some point in their life, experience a 70% drawdown. And you can look at more recent times in big names, things like Meta. Meta had an ultimate fall from grace because they shift their name from Facebook to Meta. They said they were going to build out this metaverse and it was going to be this great thing. And then what have they done since then? They've pivoted and said, we're going to cut all costs instead. And their stock prices come back because of it. But you can look at, companies like GE. GE for 20 straight years was in the top 10 largest market cap companies in the United States. It had an ultimate fall from grace when CEO Jack Welch took took his sunset and moved back out, and you realize there was a ton of financial engineering and the numbers weren't nearly as good as what they had originally been told to be. And now I don't even know if they're in the top 100 right now. And that one hits really near and dear to my heart because I live just about an hour away from Schenectady where GE is, and people had all of their wealth concentrated in that one single name of GE. And when it had an 80% fall from grace, their retirements were absolutely blown up because they were concentrated in that position.
Yeah. So again, folks, do yourself a favor. If you find yourself with the masses, ask yourself some questions. Why are you there? Do some fundamental analysis. If you've seen a big rip, maybe take some chips off the table, get your capital back, put in stop losses. There are ways to protect yourself. Just when you find yourself in the masses, time to be careful. Taylor, where can people find you?
When you feel really good, just have a question, because you should never, as an investor, feel really, man, I am so damn smart. That is the time to start to raise some red flags and say, yeah, exactly. And we've all been there. So now we're at Life Goal Investments, both on Instagram and on TikTok, talking about stuff like this every single day.
All righty, Taylor. Thank you so much. Have a great week.
Thanks, Michael.